Give me your money. Give me your money. Right, I don't do impersonations very often, but that was an impersonation of a zombie. And today's topic is zombie banks. Another piece of financial markets jargon. So let's take a look at what a zombie bank is, how you get a zombie bank, why they still exist, and why they're a problem. Okay, zombie banks. Well, there is a technical definition, which I'll cover, and there's a kind of broad brush definition. Zombie banks are banks that once used to do what banks are supposed to do. And to give it its grand title, that is maturity transformation. Terrible phrase. What it means is what banks are supposed to do when they work correctly is take short-term deposits and turn them into longer-term loans. Very useful trick. Keeps an economy ticking over. People need a home for their deposits and they need the reassurance they can get them back again. Other people need to be able to borrow on terms that suit them. The bit in the middle is rather grandly called maturity transformation. Now, zombie banks are fearful banks that won't lend to anybody. Worse than that, according to the strict definition, they are technically insolvent. What does that mean? Well, this is not a banking accounting course, you'll be glad to know, but technically insolvent, very simply speaking, means if you take their assets, X is just a number, deduct their liabilities, so take what they own, if you like, or are owed, deduct what they owe other people, you end up with a negative number. Okay? A net result that's negative. In other words, to put it simply, those are bigger than those. Now, in a lot of cases that should mean they shouldn't exist anymore. They should have failed, should have gone bust, should have disappeared. All right? But they haven't been allowed to, so they stagger around, not really doing what banks are supposed to do, okay, and causing one or two problems I'll mention in a moment. Now, how does this happen? How do you get into this position, and why don't you go bust when you get there? All right? Well, in a nutshell, banks' assets. What are banks' assets? Bear in mind, from a bank's point of view, by the way, the world looks a little bit backwards to what you and I are used to. So when I put a deposit of cash into a bank, the bank owes me that money back, because I can take that through the cash point. So that's a liability of the bank, my deposit. All right? Now, when banks lend people money, create IOUs if you like, lend the money, that's an asset provided they get the money back plus interest. Okay? And there's the problem. Dodgy IOUs created during the boom years, okay, and sitting on bank balance sheets. All right. Meanwhile, banks, big liabilities, okay, hoarding cash, hoarding deposits. So you end up with these banks which are kind of not doing what banks are supposed to do, not lending, okay. They're desperate to claw back or do something with these dodgy assets, and they are described as technically insolvent. Right, now, why aren't they going bust? Well, if they're technically insolvent, why aren't they going bust? And also, you might ask the question, why aren't they being forced to recognise the full problem and then just going bust? All right, well, let's deal with those in reverse order. Banks are hiding some of these dodgy IOUs in what are called off-balance sheet vehicles. May deal with that in another video. All right, but basically they're getting away with hiding some of these obligations. Banks have a sort of gentleman's agreement, if I can call it that they won't fess up to all of their bad loans created during the good years that have now gone bad, because that would expose all of them and force them all to raise new capital. Okay, so under the mark-to-market principles, which I deal with in another video, some of them are choosing to mark-to-model, as it's called. In other words, they're making up a value for an asset which is probably worth a lot less. How big's that problem? Estimates vary just in the UK as to how much crud there might be sitting on bank balance sheets, still not written off and put in the dustbin, between 40 and 100 billion sterling. The latest estimate I saw was around the 80 billion mark. Okay, one of my colleagues here at MoneyWeek thinks that even that is a conservative estimate. Okay, so how are they being allowed to stagger on, these zombie banks, and what's the implication? Well, the answer is very simple. Some of them have been bought by the state. In the UK, for example, the government stepped in, all right, knowing a bad deal when it saw one, and has propped up just about, some banks that should have folded by just buying enough of them to keep them afloat. Okay? Record low interest rates are allowing some of these banks to stagger on because it keeps their own cost of funding pretty low. Meanwhile, deals are being done behind the scenes. Okay, banks are allowed to go to central banks, post dodgy collateral, right, some of this crud up here, as security for money from central banks. So they're being kind of drip fed, if you like, they're being kept alive intravenously. All right. Another good example, the UK government is said to be about to launch an 80 billion scheme to encourage some of these zombie banks to lend to consumers, households and businesses and so on. What's more likely to happen is the banks will go, thank you very much, yum, 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 give us the money from the government, okay? And all they'll then do is say, well, since we can take money cheaply from the government, we will penalise our existing savers by paying them even less, and we won't bother making any more loans, okay? So they're staggering on with state support, either direct or indirect, and there's kind of mass denial. The banks are playing a sort of strange game of saying, well, we've all been guilty of creating these mortgage-backed securities, dodgy products, packaging good with bad loans and calling the whole thing good. Okay, so if we all kind of agree these assets are worth more than they actually are, for a while, maybe we'll get away with not recognising big losses through our P&Ls, profit and loss accounts, which would result from marking these assets down properly to what they're really worth, which in a lot of cases is probably not a lot. Okay, so why is it happening? Why are states and so on allowing zombie banks to continue sort of marching on, not really doing what banks are supposed to do, not really turning deposits, holding on to deposits, not creating loans, taking money from the state, hoarding it? Okay, why are these banks being allowed to operate given that they're not fundamentally doing what banks are supposed to do? Again, that they'll argue that there's no demand for credit, but frankly, you know, unless you are, for example, in the mortgage market, a top quality borrower right now, getting a good deal is pretty darn difficult. So why are they being allowed to stagger on? Well, the decision was taken that rather, after the financial crisis, rather than have a forest fire and allow the new shoots to grow up, to emerge, we would keep the old battle-hardened, too big to fail institutions propped up. Result, okay? Expect us to go into a long period of Japanese-style stagnation and torpor, okay? Because until the losses sitting hidden on or off the balance sheet of these zombie banks are properly dealt with, till balance sheets are properly cleaned up, till confidence and trust returns to the banking system, frankly, not a lot of business is going to get done. Not a lot of growth can happen, all right? So, what I'd like to see is us follow something more like the Swedish model, full disclosure of problems, less remuneration for banking executives. What I suspect we're heading into is some sort of Japanese state of semi-torpor. You have been warned. To download this free video to your favourite mobile device, find us on iTunes by searching for MoneyWeek. And the entire video archive is also available free. Just visit moneyweek.com.